Meantime, Wall Street's long-anticipated IPO rebound appears to be firmly underway with a surge of sizable public offerings in recent weeks. Joining us right now is Tom Sosnoff, Tastylive founder and CEO. We do seem to have an open window, Tom, and curious sort of how you're thinking about that and how you think investors should be thinking about all of these new IPOs that are coming to market. Do you look at this crop, if you will, this vintage, and say, these are strong companies? Do you say these are companies that have been waiting in the wings and now are just, the bag holders of the retail? What do you think?
Well, I do think that they are relatively strong companies. I mean, if you're going to compare it to kind of the surge of SPACs in 2021, this is completely different. So I would say these are real companies that have been kind of waiting for the perfect time or for the ideal time to go public. I also think that their pricing is attractive to retail investors, and I think that's kind of what's driven so much of this demand. But the other side to it, Andrew, is they're frothy, and some of these numbers and where they're opening, it's a little bit scary, and it's not that healthy actually.
So okay, so it's not that healthy. So the reason I ask this is you have folks who obviously see an IPO, they either want to call their broker, or they want to get in on the action. What's your thought, generally speaking, in this right around now?
I mean, we're an online broker, and so we don't participate in the underwriting. And so, our customers have to buy it in the secondary market as soon as it goes live, just like virtually every other online broker. And, it scares me when a stock, is a $32 stock and opens at 110. I mean, I would never buy that. And I don't really think anybody should. And I think that's happened to a lot of these cases where they're opening, 1, 2, or 3x of whatever the IPO price is. And I get the fact of keeping the IPO price low because it's good PR and it just makes a lot of sense. But I think some of the retail customers are caught holding the bag, and some of the people that are trying to stabilize these stocks are caught a little bit holding the bag. It's not the end of the world. It's a red flag, no question about it.
Let me ask you a broader question. There is a move afoot, as you know, it's happening in Europe and I think partially in the United States as well, for creating better access, more access for retail investors to get in on private companies before they ever go public. This is pre the public disclosures and all of these things. There's efforts to tokenize. There's the stuff that's happened in Europe, happening over there that Robinhood and others have gotten involved in. What is your sort of broader thought on that experiment or phenomenon?
Well, first of all, I've been in that space for a long time. I mean, I think we did the first few interviews with Republic, Securitize, and all those companies that basically tokenize these private companies, or they try to. It's very difficult to in the U.S. It's a little easier to do it in Europe right now. Still very difficult in the U.S. once you get over, whatever the crowdfunding limits are, which are mostly, 5 to 75 million. So they're relatively small numbers. But if you're asking for my overall perspective on it, our overall view, I'm extremely bullish on it. I think it's inevitable. You are going to see companies, you're going to see a lot of middlemen and different companies tokenize these offerings on a much smaller scale for individual investors. I'm not so sure that it will be the online brokerage firms like Robinhood or Tasty or anybody like that brings these to the market. But I do think that they will come to the market either direct through a middleman or direct through these companies themselves.
And what do you think of that in terms of the disclosure? I mean, we do have laws currently. The SEC has rules effectively to prevent this from taking place, in part because there's always been an anxiety that if you don't have all the same disclosure rules, you're going to have charlatans and all sorts of folks doing all sorts of crazy things.
Yeah, well, that's why the crowdfunding limits are pretty low, and that's also why there are certain requirements. Like there's a lot of audit requirements, and there's things like that you have to meet in order to tokenize it and to take crowdfunding dollars. I just think that the way the trend's going as far as digitizing different asset classes and the way the trend's going and kind of we're talking globalization and decentralized markets, I think it's just inevitable to allow small investors the opportunity. Listen, it's their money, and you want to give them the opportunity to invest in companies that they've heard about, that they have an opportunity to make small investments in. And I think it's probably really good, and we're very supportive of it.